Okay, super. Can we,
Should we kick it off?
yeah, can we get started, folks?
Sure. I think we were just waiting for a few more people to come in. A very good afternoon to all of you. Thank you for taking the time out today to join us on this very interesting ideathon that we're hosting. And I just wanted to go over a few housekeeping rules. So everybody's audio, video, and chat options have been disabled by default. We encourage you to engage with both the panelists and the startups today through the Q&A option on Zoom. In case you have any trouble with audio, we request you to please disconnect and rejoin. And if you would like to share this link with other people and they're having trouble joining us, we are also hosting this session live on YouTube via the Quint channel. I'd like to now hand over to Ms. Parvathy Ramanathan. She will be taking over from here.
Hi, everyone. Thank you so much for joining us for this very interesting format, an ideathon on the topic of digital finance. So Sattva is taking on the digital finance or financial inclusion track for Chacha 2020. And this is the third of 5 events that we're hosting on this topic. I hope you're able to join some of the others as well. We truly believe that solving for some of the financial inclusion problems, access, those topics for MSMEs, for our most vulnerable communities, is going to be really critical for us to be able to emerge, successfully out of COVID-19. And so we're really glad to have your attention here for this very important topic. With this particular format, what we've done is we actually have 3 very esteemed experts in the impact investment and financial inclusion space. We have Sushma Kaushik from Avishkar, we have Amitesh Sinha, and we have Abhishant Pant. And we're really excited to have them all on board. And their role today is going to be that of a panelist, of an expert in the topic of financial inclusion, right? And what we also, the teams that we also have on board are 5 innovators. We have Frontier Markets, Agois, Sama, Finance Card, and Lakshya. These are all organizations at various stages of their startup journey. And the goal today is to be able to, have this conversation where you as an audience participant are able to understand the journey of these organizations and where they are on the path to solving for financial inclusion. What we're also hoping is that each of the panelists is able to essentially pay it forward and share their insights and expertise. And we also want to make sure that the organizations that are pitching today are able to get some input, some feedback that will take them to the next level, right? So we're really excited for the session, and the format and the sequence here is as I've listed here. We'll start off with Sushma giving us a little bit of an expert take on the topic of impact investing and opportunities in the post-COVID scenario. After that, we'll have a couple of teams, pitch their current solution models for us for about 5 minutes. And we'll take 10 minutes for Q&A from these teams to the panelists and, taking feedback from the panelists on these organizations. We'd love for the audience also to participate. So if you have any questions for either our experts or for the organizations as they're presenting, please do use the Q&A, part of the Zoom, app and towards the bottom. And when you do that, we'll make sure to raise those questions as well, right? I'm personally very excited for this topic. I've, in my background, I've worked in the space of financial services and financial products at organizations like CME and S&P. And I'm really excited to see how this now translates and what are we seeing in the Indian context, in the development sector context, and particularly in the post-COVID-19 context, right? So over to you, Sushma, and really excited to have this great team of organizations and panelists on board for today.
Thanks so much, Parvathy, and thank you so much for inviting me to be on this panel. When I first read the topic, which is Everybody Counts, Innovations in Financial Inclusion, I was quite excited because, now more than ever is the time to focus on financial inclusion. Because as they say, I believe the stars have aligned for the next the next version of financial inclusion to take off. Financial inclusion has been around for multiple decades in our country, and started off with, self-help groups and social sectors playing a role in that space. And very soon, we saw government involvement with changes in, regulation, opening up for privatization, which meant banks and NBFCs playing a role in financial inclusion. And then again, government seeing the participation and engagement and the difference it made in terms of bringing the financially included into the banking gamut, kind of gave it a further boost. And in the last decade alone, they have seen significant strides in terms of the kind of infrastructure development. When I say infrastructure, I mean the financial infrastructure development that has gone to empower financial inclusion further. And I think one of the tipping points has been the development of the JAM Trinity, which is the Jan Dhan, Aadhaar, and Mobility Trinity. And for this to have worked, there have been, again, wheels behind wheels that have worked very well. Clearly, one is the onset of Geo and the huge difference that made to a country like ours, which I believe is a game changer. And, some of the drivers for investors like us that makes it very important to look at this sector is, one, India boasts of a tele-density of almost 90%, with urban tele-density being slightly more than the rural tele-density. So that is definitely one metric we look at when we look at financial inclusion. The other important metric is about 500 million people in our country today use internet. And that's not just the important part. What's more important is it's equally distributed between rural and urban consumers. So almost 50% are rural and 50% are urban consumers of internet, which is really a great equalizer. Third important factor is smartphone penetration has really picked up, and statistics shows that almost 500, we've crossed the 500 million mark in December 2019, and it's only increasing, right? And based on these trends, clearly financial services and fintech has been the darling of the investor segment. And there's been a jump in investment activities. Last year alone, we saw close to $11 billion of investment flow across 830 companies. And of the 830, close 2.3 billion went into startups alone. And even fintech, when we speak of fintech and innovations in financial services, India has not been very far behind. India nearly doubled its investment absorption in fintech opportunities. It went up from 2 billion to almost 3.7 billion from 2018 to 2019. And it's more, when the numbers come for this year, we'll see that it had gone up. And India is only the third largest fintech center after the US and the UK. So clearly, I think all of these things have worked beautifully for the sector, and more so for financial inclusion, because as I said, what does this data mean when we talk of internet penetration, smartphone penetration, access to information? It means that the information asymmetry that was existing 5-10 years ago is now rapidly disappearing. And so the aspirational pyramid is flattening. It's no more a pyramid. So what the rich have and want is what even the not so rich or the have-nots they also aspire for similar things. The unfortunate part is, while this is happening, the wealth pyramid continues to be pyramid, which is a broad base and a pointy end, right? So now with this COVID scenario that has set in, they're really worried that the base will only become bigger, because there is enough evidence that shows that with one healthcare fiasco in a family, it can push that family into generations of poverty, right? So multiple generations will go into poverty, and that means that the base of the pyramid is only going to get wider. And so I think now more than ever is the time for all stakeholders, whether it's the social sector, the government, the private sector, investors, impact investors, private investors, everyone, play their role in ensuring that this does not happen. Because if this happens, it is detrimental to all of us. It's not just to that one segment, because it's as more and more people evolve up the pyramid, that's when you see the economy growing, you see consumption picking up, you see production picking up, and then it starts a virtuous cycle. And so I think right now, we should ensure that this does not happen. I'm an eternal optimist, and I do see that the COVID scenario has some silver lining. I don't know how far that will pan out, but some of the silver linings are, so normally technology adoption takes about a generation to pick up, right? So there's a critical mass that happens only upon consistent usage. Thankfully, with the onset of COVID, people are very quickly adapting, right? So age is not a barrier, wealth is not a barrier. People are now forced to evaluate technology adoption much quicker than what they would have in a general scheme of things, right? So all the billions of dollars that all the tech companies were trying to pump in to just change consumer behavior patterns will probably happen just because of one pandemic that has set in. And what will this do? This will kind of change the entire landscape of the way services have been offered specifically to the financial inclusion segment. And so we are quite, optimistic about the outcomes of COVID if we are able to overcome the short-term pain that we are seeing. Of course, the government is doing its bit in, providing all the SOPs, and hopefully people will figure out what those SOPs mean to everybody. But it's definitely exciting times, and I'm very excited to hear and would like to know what the innovators are working on in their respective fields. Thank you so much.
Thank you for sharing those insights, Sushma. I do want to remind that if anybody would like to ask any questions, please feel free at any point to use the Q&A. Sushma, I think the pyramid framework that you used and the eternal optimism that was coming through in your message really resonated with me. And I'm really glad to start on that note for today. I think that's absolutely the right approach with which all of us are taking on, all of us on this panel are taking on this challenge. So with that, I believe we're starting with Ajayta's Frontier Markets. Is that right? Yeah, absolutely. Super. So we are at about 3:13. Ajayta, would you like to, if we can just enable her presentation, it'd be great to. And I'll also very quickly check in and see if we have any questions that have been asked. I don't see any so far, but maybe they'll come in later. Ajayta, if you'd like to talk a little bit about your organization. As I said, let's see if we can take about 5 minutes for the presentation and about 10 minutes for the Q&A. That'd be great. Okay, super.
Great. Thank you, everyone. Yeah. Good afternoon. My name is Ajayta Shah, and I'm the founder CEO of Frontier Markets. Frontier Markets is a company based in Rajasthan that drives access to quality products and services to rural customers in India.
Ajayta, do you have control of the deck, or is someone else?
Yeah, yeah, it's coming through. Sorry. There we go. Frontier Markets addresses access and income gaps in deep rural villages or Bharat, India. Today, 165 million people or households do not have access to high quality products and services where they actually live. 51% of this population, rural women, also lack long-term sustainable income opportunities, preventing them from changing this. We've addressed this challenge with a market-driven, customer-centric lens. Our solution has been a hybrid online-offline platform. In partnership with local NGOs, we leverage existing rural infrastructure, namely self-help groups and branch offices, to convert them into local supply chains, identifying rural women SHG members to become our Saral Jeevan Sahelis, or digitally savvy sales force who get access to products and services through branches and delivery men. We invest in digitizing the entire value chain, from branch to end customer, with our own proprietary technology and assisted e-commerce platform used for data collection, marketing, and sales fulfillment. Leveraging our customer insights and direct-to-consumer access, we partner with leading Indian companies to deliver and curated products in areas including clean energy, appliances, smartphones, telecom, internet services, digital financial services, FMCG to support all kinds of rural customer needs. To date, we have presence in 4 states, Rajasthan, UP, Bihar, and Orissa, serving 700,000 rural households with a digitally savvy fleet of 4,000 Sahelis and 125 employees. We've also been able to deliver over 870,000 solutions profitably for the last 3 years. Our greatest innovation is our technology. Developed in 2018 in partnership with our Sahelis, they've been instrumental in designing every element of the e-commerce app that you're seeing. From determining their workflow management to how each screen should be showcased, to what data they want to enter, to what business information they want from us. Sahelis can use the app for customer lead generation, data, facilitation of orders, coordinate deliveries, process service issues, and track their customers at work. The app is designed to push information as well as pull information to manage real-time activities, building a customer base for the Saheli, but also building a work credibility and a business credibility for her to move forward. This is additionally supported through Frontier Markets' delivery app, which is used by our field staff for real-time dispatch, delivery, sales tracking, and inventory management, ensuring that every product is coded, signed for, and fulfilled, which all then culminates into our back-end system for real-time data capturing. This is managed by our call center, branch managers, and data analytics team to ensure efficient processes, collect insights on customers, and drive direct-to-consumer engagement. Today, we collect over 25 variables to predict consumer demand through IVR, this app, and direct-to-consumer engagement through our Sahelis. Now, on March 23rd, when lockdown was announced, Frontier Markets doubled down on digitization. We leveraged our infrastructure to access 2,000 villages to understand what the challenges were. We knew the gaps were about essential goods delivery, income losses, gender equality challenges, and access to banking facilities. We quickly pivoted our focus from consumer durables to driving essential goods delivery, increasing the number of Sahelis in our villages to optimize access and increase employment, invest directly into direct-to-consumer digital tools to support remote management, and introduce doorstep banking services. We've built a direct-to-consumer interactive web catalog, allowing rural customers to directly provide feedback and place orders for essential goods that are delivered via the Saheli. These orders are connected to our back-end system, and local Sahelis are able to follow up. What this does is it allows both the Sahelis and Frontier Markets to manage demand faster, as well as access insights to develop a more robust engagement program to support the Saheli. Since she can't travel everywhere in her village, this supports her ability to manage customer engagement remotely. And in response to, one second, this is not moving. There we go. In response to banking challenges, we partnered with Echo India Financial Services to introduce doorstep banking facilities. So basically now customers can access their Jan Dhan Yojana bank accounts at their doorstep. We're acting as an ATM. Through integrated APIs, Frontier Markets can treat cash withdrawal, cash digitization as another product on our platform, allowing customers to bridge their Aadhaar challenges, also prepare them for future cashless transactions for anything and everything that they buy with Frontier Markets. And in the last 21 days, we've already been able to see some significant success. We have already had 2,000 new Sahelis onboarded virtually through virtual training management systems. 10,000 customers have already started using the app to place direct orders. We partnered with FMG companies like HUL, Marico, Colgate, and others to launch over 140 new SKUs. And we've launched a weekly delivery model in the village, completing over 15,000 deliveries, adding 1,000 new deliveries, and ensuring that every customer that placed an order last week orders again with us. 13,000 customers have already opted in for digital banking services.
Ajit, I just want to let you know, you've hit the 5-minute mark. Any additional time will cut into your Q&A time.
Sure. Yeah. Frontier Market's strength centers around its business model, processes, and technology, and our experience in understanding the rural customer. We've successfully worked directly with NGOs and SAGs to develop a package service, and now believe that deeper shift in digital will enable us to scale in a different way. We can now work with the State Rural Livelihood Mission to access SAGs and existing staff to onboard, train, and manage a much larger network, which we see is a massive replicable opportunity. We're also doubling down on further investments in technology, adding features for direct-to-consumer engagement on our app, but also adding more financial services through our platform in partnership with fintech companies, and investing in data science and AI to create predictable patterns and insights to develop deep consumer understandings that can be further delivered to our product companies to help innovate their product basket, and invest in digital training tools to onboard people offline a lot faster. I appreciate what you said, Sushma, because I agree. I think that there's such a different level of adoption for technology, and there's a unique opportunity for us to now double down on that training and make that work. So keeping that in mind, the questions that I had for the panelists was around looking at this on a COVID lens, regular lens, and an innovation lens. Knowing our deep digital and rural connect, what other products and services do you think would provide value for our rural customers in those three segments, but also how do you see partnership models evolving or innovating, leveraging our kind of platform? Thank you so much for your time.
Ajita, is there any one panelist you'd like to direct either of these questions to, or?
I think I would be open because I think everyone comes with their specific expertise.
Yeah, super. Sushma, Amitesh, Abhishant, were you able to catch the question? Would you like it repeated?
Those questions are fairly well illustrated. If nobody essentially is going, so then I'll take a few of the questions and then. So first and foremost, Ajita, good to see this progress. I think I met with some of your colleagues last year in August in Delhi, and since then it is good to see this movement. Second, specifically from the point of view of COVID, when I was looking at it, I could not find a proposition wherein you could have connected with, say, an insurance player who is offering a COVID-related product. If you intend to do so, then from your segment and market point of view, there is an entity called Discovery. They recently launched an insurance product for almost 600 million users of RuPay cards. So anyone who is a RuPay card holder can actually opt in for a Discovery insurance product, which is a beautiful API integration on top of insurance players' insurance value proposition. So if you appreciate the effect of API in a box framework, then it's an insurtech which provides that, so it can ride on top of your value chain and can be offered. They work with a lot of institutions which are in the BC or rural e-commerce value chain. So they may be in a position to add value to your value chain in that. So that's first piece. Second, essentially at this point of time, any business which essentially satisfies four things is what you possibly may want to look at from a tie-up point of view. First is a business which can be, which is digital in nature. It can be delivered digitally, it can be consumed digitally, and it can be purchased digitally, and it has a need in market. If any business which essentially satisfies these as a condition, then you may want to look upon that from a working point of view. Another piece on that is essentially all those who are in the e-learning value chain. They are the ones who essentially have in last few weeks or so have found great acceptance. You may have a question that whether that has an applicability from a rural value chain point of view or not. We annually undertake a road journey in which we cover 11,000 kilometers of India every single year. And in that journey, we stay in around 20 odd villages every single year. And in that conversation, which was across the board, across villages, we found common was women accessing education tools for their kids online. So after WhatsApp, that was the biggest thing that we found. So from an education point of view, and if it is a colloquial, local language content created and delivered digitally, will possibly find an acceptance from your ecosystem point of view. So these are essentially two pieces. I won't take time of other panelists, and over to others.
Thank you.
Yeah,
that was great.
Thanks, Abhishant. Those are some really great points. I just want to follow up and add to what you say in terms of creating these digital platforms. And Ajita, I was astonished to see that you have added 2K micro entrepreneurs in past 28 days. That is a testament of powerfulness of a digital platform. So my two piece of advice, just adding up to what Abhishant said, is if you are able to create some sort of a stickiness with your Sahelis in terms of providing them a stability, and even Sushma mentioned that, you know, how some of these micro entrepreneurs need those stability in the adverse times. So if you're able to create that customer stickiness through online education platform and give them a way where they think that these digitally enabled learning, education, or the other needs they have, are going to add value in their overall scheme of micro entrepreneurship. And second, in your regular business opportunities, even with your end consumers who are basically, you know, doing that consumption of your cross-sell products, even with them, some sort of subscription model. You know, I'm just bringing the topic of customer stickiness with your micro entrepreneurs and with your end consumers as well. I think that is where we are all looking into. We all talk about some of these online platforms, and they're able to survive with great stability, and even more now in the given situation is having that fixed revenue stream, and then they add up and build up on that particular base.
I think that's really interesting. Just one quick point around that is that when we started Essential Deliveries, we made it into a weekly delivery model. So now customers are wanting to opt into a monthly subscription so that whatever they've ordered that week, you know it's going to be a repeat. So it is an interesting thing to think through, but then designing good loyalty programs around the subscription itself. And also, you know, curious to know, and I guess this is a leading question for you, Sushma, looking at the different financial service products that are out there, right? How do we leverage our data and our understanding of our women to then start linking them more directly with some of these financial service stability products, right, that could possibly enhance them?
Sure. So in fact, one of the questions I had, and I do know you mentioned that you've tied up with SHGs and NGOs in reaching out to these women. But another last mile, robust delivery channel has always been the microfinance institutions.
Sure.
And microfinance institutions have, now that, you know, the microfinance loan is a plain vanilla loan product, but they are trying to innovate in introducing more advanced loan products, like maybe an MSME loan or a personal loan of sorts instead of just the group loan. So, you know, and access to credit to improve livelihoods is definitely something that can overlay beautifully onto your platform. And as Abhishant mentioned, insurance is a need of the hour for, especially women are very particular. And I think all these years, insurance has largely been a push product. But now with the awareness levels going up, more so in the health space, and with the emergence of new products in the pocket insurance product space, I think there's definitely a marriage of innovation, digital platforms, and product manufacturers who can come together to service this segment well.
I'll definitely follow up with you on that, because I think that's a really interesting thing. One last question, because I know I'm technically out of time, is
would it be possible to hold that or take that offline?
Okay, so I'm just going to say 3 words. Will digital reduce transaction costs as a value for MFIs? Just keep that in the back of our mind. Yeah? Okay, thank you so much.
Okay, you do have, Ajita, 5 or 6 Q&A questions that have come to you. What we do is share those with you afterwards if we're not able to address it here. But what's really exciting is that you know, your innovation sort of driving thinking in the audience and driving, hopefully, you know, outreach for you as well. So very excited to see that. Thank you so much for your time.
Thank you. Thanks a lot.
Absolutely. Prathamesh, could I ask you to please turn on your video? Are you all set?
Yeah, all set.
Awesome. So our next and founder is Prathamesh, and you're going to be talking about Agios, all yours.
Okay. I don't have control on PPT. Okay, fine. Okay. Good afternoon, everyone. I'm Prathamesh Kant from Agois. A very quick background. So I'm BTech, studied engineering, IIT Kanpur, and had a stint at corporate. I was at Goldman Sachs for 7.5 years, and this is my second startup. And my co-founder is from IIT Roorkee and heading the entire product thing. Okay, and he was a part of my previous startup. Okay, so we have been in we have been particularly working in Karnataka, North Karnataka, Gulbarga area, right? And we have been in field for about more than a year. Okay, and so this is so the problem statement essentially came after being in field for quite some time, right? So we didn't have this idea from day one. Okay, so we spoke to more than 250 farmers in that particular region, asked them simple questions, needs, aspiration, pain point. What we got to learn from them was essentially I mean, their need is really very simple. One, want to get paid as high as possible, and secondly, get paid as fast as possible, right? And what apparently came as a bit of surprise to us, was even fast is a very important word for them, right? And unfortunately, currently they are by the scheme of things and the design, they are having faced a choice of higher or faster. There's an or. Okay, and the problem simply comes because and this is often true for almost all farmers who are covered under government minimum support price scheme, which of course I mean, as a policy, it supports monocropping and a lot of reliance on government policies also. Okay, so specifically talking about these poor farmers. Okay, so government price is about 61 rupees kg, and market rate is significantly lower than government price. Okay, however, so obviously government channel is preferred. Okay, but the problem is that payments take a significant time to hit their bank accounts, and because of procedural and bureaucratic reasons. Okay, so what they wanted was essentially best of both worlds, right? So what we are the idea is simply to replace that or with an and. I mean, very simply put. Okay, higher and faster payment at the same time. So what we are doing, effectively put in layman terms, is the kind of bill discounting of government receivables. Okay, so once their produce has been procured under government channel, and they are waiting for payments, then against that we provide them finance. Okay, our model is that of financial intermediation. We aggregate line of credit from NBFCs currently, and idea is also to work with banks. Okay, and infuse into their accounts. Okay, and once once they receive their payment from government, then we do recoveries, right? More importantly, the entire recovery process is not manual. Okay, so this is all by using a pool based recovery mechanism, which we use NACH, National Automated Clearing House. Okay, and our revenue model is essentially driven by the spread. Okay, so this particular facility is being provided to farmer at a certain rate, and we get money at a certain rate. So essentially the gap drives our spread. Okay, so
next, sorry to interrupt your flow, but just want to remind you, you have just 1 more minute to present.
Fine. Okay, so quickly about the tech stack, right? So we use a mobile app, okay, in order to coordinate entire field operations. We have not given this directly to farmer yet. We would want to make it completely contactless and give it to farmers. Okay, and backend we are integrated with Yes Bank, Lotus Pay, and NPCI. Okay, next slide, please. And we are also leveraging India Stack, and the idea is essentially to potentially to automate this end to end and make it contactless. Next slide, please. Okay, so till now we have been in 3 seasons, and we have done disbursal to total 80 farmers, and we have done all successful recoveries, 0 NPA, zero delinquencies. And currently we are working with Kudos Finance, and more importantly, we are working with primary agriculture credit societies. In partnership with them, we reach out to farmers. Okay, next slide, please. Okay, So once we like become big, these are all potential competitors. So Samunati Finance, which is into agri receivable financing in general, right? And CML is into warehouse receipt financing. However, our model is strictly that of bill discounting, and I mean it's no direct competition, right? And the differentiation essentially comes from the fact that we are lending. One, we are lending to farmer directly, and secondly, these are uncollateralized lendings. Okay. Next slide, please. Next. Okay, already talked about. Okay, and we are so Jagdish is our key advisor, and he has been in field of agriculture for 20+ years. Okay, and Hemendra Mathur is helping us as a part of BIA program.
Prathamesh, would you like to get to your questions for the panel?
Sure. Okay. Yeah. So one issue that we have been facing is essentially simply the trust angle. Okay. So how have your portfolio companies went around building trust among farmers? Okay, so a lot of our product characteristics are from their perspective too good to be true. Okay, so there is that component also. I mean, people have told us that. So so that's like one question that I had, right? And then essentially what have been some ways to go about advancing digital penetration, essentially inducing a behavioral change, giving some incentive. Okay, so what have been some good success stories around there? And I had one specific question about NACH, right? So we are having to use a paper NASH, okay, not e-NASH, simply because of the reason that some banks, example PKGB, Prakti Krishna Gramin Bank, does not support e-NASH. Okay, so now the paper NASH makes the process. I mean, it's a physical signature is required. Okay. So now, can there be alternatives around it, right? Or can this be made completely digital and signed digitally, say using Aadhaar based? That's one specific question I had. And then one opportunity that we see is essentially leveraging money from priority sector lending pool from banks, NBFCs, right? And so question is about how can we, I mean, tap into that really? Yeah, thank you.
Thank you, Prathamesh. Would anyone want to go first in terms of answering? I saw you smiling at the first question.
Yeah, I can take that up in terms of building the trust with the farmers. We at Greenlight Planet experienced a lot, and I think when we were approaching people in rural areas, I think the first question was, where is this company from? Are you guys Indian? Are you guys based out of China? And I think when we sold our first product, and that particular customer who bought it, he was the biggest brand ambassador for us. So if you're able to create that ecosystem, if you're able to create few brand ambassadors on the ground who can talk about your product, that will not only help spread what you're doing, but that is one way of building trust. And of course, as and when people start using your product, they see that value add. That's a different level of building trust. But I think one of the early or initial sources of building trust was creating some presence who actually can talk about yourself, talk about your company, talk about the value add. And this also goes with the digital penetration question which you have. Of course, awareness and education. So if you create those kind of micro entrepreneurs or ambassadors who can tell or teach other people in that community, and those some of the easy picks could be a teacher, a small owner of a small mom and pop shop. So things like that, who are little influential in those rural areas, be the Sarpanch. I think Sarpanch was a huge push for our products and some of the portfolio companies which we have seen. So I think those are some of the advice which helps create that on-ground presence.
Sure.
Could we take a look at the question slide again, please? It was helpful to have all four of them there. Okay. Thank you.
Any other thoughts from any other panelists? Most welcome. And I have a specific question about NACH. I mean, if there are any thoughts around that, and about the priority sector lending.
So Prathamesh, good to see you again, and good to see the movement on things. First and foremost here, I'll start from the second question, how the digital penetration part of it. Yeah, as far as digital penetration value chain is concerned, unless and until you are in a position to bring somebody who at the start of it is in a position to provide for a patient capital or essentially a CSR pool from the point of view of a resource, you will, तुम अपना सर फोड़ते रह जाओगे, you will essentially not reach anywhere. Largely for the reason कि boss उसके लिए for advancing the awareness, education and things of that nature, it won't work. My suggestion will be simple as कि एक छोटा सा काम करो, hire a summer intern. Don't hire a consulting organization because they will eat you out. Hire a summer intern. Give that summer intern a task कि boss बताओ corporate social responsibility के point of view से who all are corporates who have CSR focus from financial services point of view. Okay. Write to the CSR heads of those corporates asking them what is that which they are doing from the point of view of financial inclusion. Okay. Specifically. And if they are doing anything from the point of view of financial inclusion, look at those geographies. These are the geographies wherein there is already patient capital deployed for the purpose of digital penetration increase in those value chains. So your awareness quotient of the farmer of that ecosystem will be far higher than anywhere else. Yeah. So बहुत simple है, पहला step ये ले लो. दूसरी चीज, typically from the point of view of NACH can be digitally signed and so on and so forth. From that standpoint, you will have to look at NUUP, which is National Unified Payment Interface, which also is a USSD based interface, wherein there is a possibility of looking at an OTP led UPI value chain, which essentially allows for a mandate to be propositioned in the USSD value chain. So that's where possibly you may want to work upon, and you will have to write a mail to, I'll send that mail of Naveen, जो inclusion का part देखता है, write to him. हैं?
Naveen Jain NPCI.
हाँ, Naveen Jain, Saurabh Tomar. Okay. So unless you already had a chat with them, that is NUUP का specifically part बोलना. That's where you will have to essentially look at.
Okay, so I had met him and we are मतलब मेरी कभी-कभी उनसे बात होती है नवीन.
तो जितनी भी मन की बातें हैं सब उनसे कर लो, क्योंकि उनके अलावा कोई और साधन तुम्हें सॉल्व नहीं कर सकता है. The last question of yours from the point of view of priority sector lending pool of money from bank. At this point of time in the stage and age at which you are from the point of view of your startup, that will not come. Okay. Let me be extremely brutally honest with you. Nobody is going to put a PSL money on a startup which essentially does not have a pool of even say 1,000 farmers or 10,000 farmers on which it is proven. So it is not going to come. What you should ideally do is this, that go out and market, do some kind of a crowdsourcing of funds, prove your model, because it's a good social cause via which you are essentially providing for an invoice discounting from a value chain point of view. Go out, ask people, go for crowdsourcing of funds. I will put 10,000 rupees into that, take it from me, and then raise a 10 lakh rupee, identify 100 such people, go out, raise that money, test it with that, make it, prove it to the market at a better level. Therein possibly you may find people who will put in greater value from the point of view of capital. But again, you also may want to look upon the trusts, and not now CSR professionals, but trusts. Corporate trusts who have mandate to work on grassroots and last mile, they will be in a position to work with you directly as well. So थोड़ा सा मेहनत करनी पड़ेगी, उस side पर देखें, it will work for you.
Okay.
Thank you.
Yeah, thank you, Abhishant. Sushma, is there anything you'd like to add? Any perspective you'd like to add here?
I think the other panelists have already touched upon all the critical issues. So I think very good suggestions are given. I'll refrain.
Okay. Yeah, thank you very much.
Thank you, Prathamesh. It was really, you also have a few questions that I think we'll have to pick up and share with you offline.
Sure.
Yeah, and no questions have come in for panelists here. Okay, great. All right, now Amitesh, it's our pleasure to have you share some expertise here, and please go right ahead. Amitesh is, as you can see from the bio, is a partner at Sinha Funds, and particularly Amitesh, I think you wanted to address the topic of what are financial inclusion opportunities basis announced COVID packages, touching a little bit, I think, on Sushma's sort of, optimism. Look in terms of looking at COVID as an opportunity to perhaps drive innovation in the midst of this pandemic. So over to you, and we're really excited to hear what you have to say.
Thanks, Parvathy. Just imagine if in today's world, if you see a production house releasing a movie in the traditional theater, what would be the reaction be? It's a great move because that's traditionally how we have been experiencing that, but we'll have to see what the current situation is. And I was just reading one article or a letter, an open letter, which was published by Inox this morning, and they were a little anxious on one of the production house which chose to release their movie on an online platform. So I just want to correlate that with all the financial inclusion which is happening. We create a lot of products, we create a lot of solutions, but we have to make sure that we understand the customer behavior and tailor-made our products based on the environment, based on the macroeconomic situations, what we are going through. And it's even more important in the world which we are getting into, where customization, personalization, and behavioral study are going to be very elementary in terms of creating these services, in terms of creating our products and offerings. Now, coming to a question, a very specific part of financial inclusion is lending, and it's a very important aspect of this particular space. Every player in this industry is aware of. But I think the real inclusion is going to be with creating a financial stability, and Sushma gave some examples, and she made us aware that how financial stability is a very important factor to increase that consumption, to create that stability amongst the end consumers. Now, some of the obvious ones is even Abhishant mentioned about the insurance and the other obvious ones, payment services, fund transfers. I love to see what Agios is doing in terms of bill discounting and creating that solution. So I think one of the most important thing is keep creating that awareness and building an ecosystem. We keep hearing about the digital penetration. I think all of that is going to come with on-ground presence in terms of creating that ecosystem. And how we are going to do that, I saw Frontier Market in terms of creating that tailor-made solutions and giving a vast offering. I think that is a great initiative which actually will help and create and build that value proposition for the customers. Now, let me give you two examples, and we'll try and correlate with those two examples. Just think of a driver. His household income would be something around, say, 40K. He may be earning 20K from his driver's salary. His wife will be serving and helping some households, maybe generating another 10,000. If they have a son, maybe working as a security guard, they earn another 10,000. So roughly 40K is their income. And what financial services do you think they would need? They have a very stable financial income, a recurring income. But I think the financial stability, what they need is at the time of adversity. For example, if they have any medical urgency, that is where, their whole savings are going to wipe off. And those kind of targeted segments needs to be created, needs to be curated based on these kind of consumers who have capability to earn recurring income. But we need to educate them. We need to create that awareness and push for those kind of financial inclusion products which cater to these particular segments. Now, on the other hand, if you see a farmer whose mostly income is dependent on various external factors which are beyond his control, like monsoon, seed, fertilizer prices, availability, and at the end, they struggle to get the right price. Now, on this front, what farmer needs is stability in terms of his financing to make sure that he has a good produce, he has a good monsoon, and then he gets a right price. We can create that value chain. We can create a product where that guy gets what he needs. Now, coming back to some of the MFI sector, which has done an exemplary job in terms of keeping the default rates low And that has come up with decades of ecosystem, because now the users of these lending offerings is aware that this is the prime source of lending they can get. And that's why the default rates are so very down if we compare to other banking sectors, because he's aware if he defaults, then his main source of funding is going to go away. So he tries to keep that intact, and that default rate is down. And I think we should leverage on that, try and understand the behavior of the customer and his needs. Now, coming specifically to some of the announcements which were made by the government this Wednesday, where they agree to provide full partial guarantees on investments, debt securities issued by non-bank lenders, and under two different schemes. Now, the first one was 30,000 crore liquid facility, which could support and infuse liquidity for NBFCs, housing finance companies, and microfinance. Now, the facility will help create demand for the securities by the banks, by these non-banking lenders, and provide a lot of security. But that might not be enough. If you see that today's NBFC account for about 27 lakh crores in terms of lending, out of which 19 lakh crores is being financed by capital market. So this was a great scheme. Overall, it's going to create a liquidity, but I think it's not going to bridge the overall gap. And I think that gap has to be built by capital market players. So I think for MFIs and the NBFC, they have to keep continuing that push towards the capital market. Howsoever, there was also a transmission of about 3 lakh crore in terms of a collateral fee government-backed loans to MSMEs. And I think mostly will follow through NBFC sector and can be quickly refinanced with the banks. And that again is going to create a lot of liquidity on the NBFC balance sheet. Now, I'll just correlate with this liquidity fund with some of the things which is happening on ground with the data which was published by World Bank and Economic Times. Roughly about 40 million internal migrants have been affected, and assuming that 50% return to their native and try and do something on their own, maybe something on the agriculture side or something to start on the small business side. Considering that, and considering the average ticket size of what MFI and NBFC lend, roughly about $400, and assuming that out of 40 million, 20 million apply for those kind of loans, that's roughly about $8 billion of demand in terms of a microfinance lending. So the bridge of these 30,000 crore, which is roughly about $4 billion, and I'm talking about, and these are very high level guesstimates. Demand would be much more because your existing players will have their increased demands in terms of all the initiatives which we are seeing to create that consumption. So you can see that there's a lot of gap which needs to be created, and I think capital market is going to still play a very big role in terms of bridging that gap. There was also a 45,000 crore, which was a first loss guarantee, which will be provided by the government of India. So that's also going to create a liquidity. But overall, all these schemes are great, going to push a lot of MSME initiatives, going to push a lot of liquidity. But the overall gamut and the overall understanding would be to keep continuing with the usual business, try and see other revenue streams in terms of expanding the offering, keep tapping the capital market to see how you can increase that liquidity. But all in all, great schemes. There are more days, and as we speak, I think 4 p.m. again, the finance minister come and she will let us know what's next to come and support this overall scheme of things, which was announced by our PM earlier this week. With that, I will just end by saying that if you think that you have exhausted all possibilities, you haven't. Because this is a famous quote from Thomas Edison. I admire him a lot. I've worked in GE, so we have gone through that kind of training, and that's the spirit we should have. We should keep trying. We should see what are the create new avenues and see how we can, grow and support and sustain. Thank you very much.
Super. I think thank you so much, Amitesh. That was a lot of specific context on the scheme, as well as a very strong current of optimism. And I really like the sort of overall message to the audience and I think our organizations here around saying there's more avenues to explore. And I think that's exactly what the organizations here are seeking to do, right? So thank you for that context. And also congratulations, sang on time. So that's great. Okay, cool. Our next organization is Sama. Pranjal, are you, could you please turn on your video so we can see you as well?
Yeah, I need the permission of the host.
Okay. Alicia, would you mind helping with that?
Sure. Who needs the permission?
Pranjal, please.
Yeah.
Pranjal. Sure.
Thank you. Thank you.
Yeah.
So here's a quick. Sorry.
Yeah. Can you see me?
Sorry. Yeah. Yes. Absolutely. Please do get started. Amitesh, I was just going to say there's a quick question for you. I'll have to figure out how we take that.
Super.
Yeah. Please start, Pranjal.
Okay. So, yeah. So I'll really honored to be here. Thank you so much, Parvathy. Thank you so much, Alicia. My name is Sinha. I'm a lawyer and a co-founder of an organization called Sama. We are based out of Bangalore. I'll dive right in. So the pain point we are dealing with is the Indian justice system. Resolving legal disputes in India is not easy. An average dispute takes 3 to 4 years. It takes 520 rupees per hearing. India is spending 0.4% of the GDP just on courts. There's a lot of uncertainty. It's a very stressful and harrowing process. My father hates lawyers. If you have seen that movie called Damini in 1995, where Sunny Deol screams Tariq pe Tariq, that is still the reality of the Indian justice system. And I'll come to the next slide, which is this. And before coming to the solution, this is a very big problem. Like if you look at the courts, there are around 3.2 crore cases pending in India. It will take us around 464 years to clear this backlog of cases. For every one case which is there in the court, there are 7 people who have cases, but they are not filing it because of the time and money it takes. This is known as the unmet legal market. So coming to a solution which we have been working on since 2015, how can you help the courts? You can help the courts by not going to the court. So these are out of court mechanisms such as mediation, arbitration, negotiation, conciliation, where these are legally recognized mechanisms where you resolve disputes with the help of a mediator or an arbitrator. So what we did was we are bringing these mechanisms, mediation, arbitration, fully online. Can we move to the next slide? This is the negotiation, mediation, arbitration, and we have around 500 plus mediators, arbitrators in 85 cities across India. Now, we deal with a lot of disputes. One of the use cases which I'll be focusing on today is banking disputes. We work a lot on loan disputes, small to medium sized loan disputes. So for a bank, if they have a loan default with a customer, if they have to engage a lawyer, it will take them 3 to 4 years in a court or a debt recovery tribunal. It takes them 3 hours and 15 minutes on a platform. If they have a dispute and they have to engage a lawyer, it will take them around 24,000 rupees plus 20,000 rupees, which is 44,000 rupees for the lawyer's fee. On our platform, we have a flat fee of 4,000 rupees per case. And more importantly, we are not like the collections team who uses intimidating or recovery tactics. Our mediators are trained neutrals who are supposed to bring both parties reach a settlement. If you can move to the next slide. Yeah, the business model, how it works is that the mediator arbitrator takes 60% of the fees and we take 40% of the commission. It's a B2B2C model. So the enterprise engages us, puts our summer clauses in their contracts, and we help them resolve their disputes. If you can move to the next slide. Some of the clients we are working with, one is, for example, ICICI Bank. They have a contract of 10,000 personal loan disputes up to 20 lakhs with their customers. There are other NBFCs as well. Udan, for example, Affiliate Finance, FT Cash, which give loans to Kirana stores, small loan vendors, loan debtors. And if there's default in those cases, we help them settle it fully online. We also work on e-commerce dispute with OLX. Vedanta was another client. If you can move to the next slide. So with respect to financial inclusion, right now, how it helps here is that in knowing that a system like Sama exists, can give a lot of confidence to the lenders. It will give them the confidence to lend freely because they know in case there is a default, and that case probability is very high, looking at the NPA crisis, looking at how the e-Mudra scheme, which gives small loans up to 10 lakhs, and number of defaults which have happened there. If they know that there is a mechanism in case a default happens, they can resolve it online efficiently and also ensure recovery. It will help in ensuring that kind of confidence to the lenders. Second is, when we handle these disputes, so we are not representing the bank here. We are a neutral here. Our job is to make them reach a settlement. It will be surprised to know there are only 3 to 5% of people who are intentional defaulters, who are defaulting willfully. But most of the people, they want to pay back. They don't even want the tag of a defaulter. But they are facing some genuine circumstances, whether they have lost jobs or medical emergency or family emergency. And because of that, they're not able to pay. So what we do is our mediators or arbitrator, they sit with him on a phone call, try to figure out what their cash flow situation is like, and come up with a repayment plan, which is also conducive to the bank's policies, and make them reach a settlement. So a lot of our debtors are also small business owners, and they are very worried about their CIBIL scores, for example. But if you settle a dispute, your CIBIL score really goes down. So we make sure one of our settlement agreement definitely ensures that there's a CIBIL clearance which a bank can offer, so that even if they repay within 3 to 4 months, their CIBIL scores do not get affected. So this way we are helping both the lenders and the debtors, and this improves the financial health in total.
Sandra, sorry, I hate to break your flow, but you are 1 minute over time. That's just going to cut into your Q&A time.
Yeah, just the next slide is on the questions itself. Yeah, just one thing on how because of COVID, a lot of people are going to default on payments, and that's going to increase further. So they need a mechanism to resolve those kind of loan defaults. And with this, I just want to end with the questions to the panelists. These are the 2 key challenges which you are facing. Banks don't want to create a precedence of settling disputes. You can't take a loan from an NBFC and then settle with me later. We want full repayment with interest. So they're worried about their perception being created about them. But at the same time, they also realize this is one of the most effective ways of actual recovery. Getting a judgment won't help. So how can we tackle that? Second question is respect to how do we ensure our neutrality? Ministry of Law and Justice, Government of India has recognized us as a neutral institution. But still, when we approach the customer, the debtor on a call, they think of us as a call center of the bank or a recovery arm of the bank. So how do we establish that neutrality perception that we're neither from the bank side nor from the customer side? These are a few major challenges that you are facing. Thank you.
Thanks, Pranjal. Sushma, Amitesh, Abhishant doesn't have his video on, but would any of you want to pick up the 2 questions from Pranjal?
No, firstly, Pranjal, very interesting solution, and this clearly is a problem more so now in the current environment where there will be a lot of disputes, and I think settlement is probably the only effective way of moving forward. And I think your conundrum is clearly something that is challenging, right? Like how do you tell people that you are an independent entity and not you have no alliances with any one particular private institution? I think that's definitely a challenging, and I think that can only probably only be solved by a lot of awareness, by bringing on people with credibility who can speak on your behalf. And I think that's probably the only way.
Okay, fair enough, right?
Any other thoughts, Abhishant or Amitesh?
Yep. So Pranjal, good to see this here.
Thank you.
First and foremost, so when you're referring to legal pieces and you are as if now restricting yourself from a question point of view to banks, I think you are also already restricting yourself from a horizon point of view. So you may want to say lenders rather than stating it as banks. That's first piece.
Fair enough. Right.
Second, you used a word, and I'm correcting a few things just for your purpose. You used a word regularly, recurringly, which is CIBIL. Yeah. CIBIL is a credit bureau, is one of the 4 bureaus which are in India. What you need to talk about is credit score and not CIBIL. CIBIL is a name of a company, while credit score is what represents an individual's ability and willingness to pay.
Right.
Specifically coming to the point with reference to banks do not. So you will have to really look at some of the institutions which have a great name from the point of view of digital journeys at to start with, because if you want to solve for Bharat and India at the same point of time, you will not be able to achieve that. So therefore, you'll have to possibly look at some of the institutions which have a lot of digital journey with them, and co-curate and create content which essentially educates, informs, and makes the customer aware as to why he should pay on time and what is the need for him to do so, him or her to do so.
Right.
Such institutions are, so there is an entity called DMI Finance based in Delhi. It became a unicorn 1.5 years back. Arindam is the CEO of that entity. Arindam Datta is the CEO of that entity. So DMI is one wherein you may want to connect with. They work with around 200 plus odd fintechs. So if you want to say that who empowers the fintechs of India,
Right.
from a lending point of view, a lot of it goes to DMI. After DMI is Apollo Finvest, which essentially does a similar kind of a thing. What will happen as a result of that is you will have a distribution footprint via them, and you won't have to individually approach a Lizzie of Zest or Satyam of Loan Tap or and everyone else has put together. So you won't have to reach them as such. If you go via distribution value chain, you won't have to do that.
Got it.
So therefore, that's essentially with reference to the first point. With reference to the second point which you raised with reference to neutral perception and so on and so forth, I think therein you may want to work with institutions which are specifically in the value chain of credit optimization. I'm sure you would have heard of them, entities like Credit Mantri, Credit Sudhar, Credit Help India, and so on and so forth. So there are some 7-8 institutions which are specifically in the business of improving credit scoring and understanding from a consumer value chain point of view. You are non-compete to all of them. As you are non-compete to all of them, if you can think of yourself as an API layer, which essentially enables the value chain among them, and if you position yourself that way, you can multiply yourself from a distribution standpoint. And they will not see you as a competition value chain in any case. So that's how possibly you may want to look upon that.
Well, that's really helpful. Thank you. Noted.
Amitesh, is there anything you'd like to add to both the responses?
Abhishant is too comprehensive for me to add anything. I'm good. Thank you.
Got it. Okay. Super. Great. Pranjal, thank you so much for your presentation, and I hope this was helpful.
Definitely. Thank you so much.
We can now move to finance card, and we'll need to, sorry, Nikita, you'll need to unmute them.
Yeah, hi.
Hi, super.
Am I visible?
Yes, absolutely. Welcome, Ganga.
Yeah, thank you.
Please give us an overview for about 5 minutes, and then you can have another minute.
Sure. So first of all, a brief. Yeah, thank you. So first of all, a brief background of myself. I'm a management graduate from BHU, and I've worked in corporate since last 8 years into BFSI sector. And then after put the corporate job and started Finance Card in 2018, which is Finance Card is basically an AI-driven marketplace for financial products matchmaking. And this is currently being incubated at Sci-Fi Lucknow, and it's a virtual incubator of NASCOM 10,000 startup as well. So it is headquartered in Lucknow, and it's a full stack fintech marketplace platform to distribute credit and financial services across various states, and caters to more than 50,000 farmers and a current network of 3,000 plus merchant partners and 20 plus institutional partners are there. Recently, once lending business has been on halt due to the COVID-19, we have introduced Finance Card Pay, which is basically providing services of AEPS and money transfer to the rural areas through our merchant partners. And finance card is basically walking into tier 3 and tier 4, catering to the needs of tier 3 and tier 4 cities. We believe that access to credit is a powerful tool to create a meaningful social and economic impact. And at finance card, we believe for every borrower there is a lender. So we match that borrower to that lender. That's how we are working. Next slide, please. Next slide, please. Yeah. Before this slide. Yeah. So basically, what we are trying to address the problem in the tier 3 and tier 4 cities. We have gone through the data and found that only less than 3% of total credit flow to agriculture was towards the farm mechanization. It was a data from the NABARD. Transcart is increasing the farm productivity by increasing farm mechanization penetration in India through sustainable financing in income producing assets. And we are also creating hyperlocal credit score out of 8 agriculture households. Only one person have is able to avail the credit from the formal sector of lending. So finance card is creating hyperlocal credit score so that we can digitize the finances of farm capabilities of the farmers. And we are also creating marketplace for the low cost and high quality products for the farmers for the farmers. So at our platform only, this is an assisted model of providing financial services. Customers come to our retail partners and they apply for any particular product, either it is loan, insurance, or credit card, or any investment product. Then our AI and ML works in that one and matches the right set of product based on his profile, and that's
Can anyone else hear Ganga? He's frozen on my screen.
Is it audible now? Hello?
Yes, yes.
Next slide, please. Yeah, so if we talk about comparison, competitive advantage, we have a unique algorithm for financial matchmaking. We have a alternate credit data evaluation, ability to serve the underserved and unserved population, and we have a very simple access and faster onboarding process. We are working to B2B2C model. We are having tie-up with various institutions like SSGs, money transfer companies, and other institutions. That's how we are that is how we are approaching the customers. Next slide, please. If we talk about our team, we have Amit Khare, who is heading our strategic partnership. We have Mr. Sunil Gupta, who is CTO. Mr. Pankaj Tripathi, who is heading our business development, and Amit Yadav, who is into technical team. If we talk about recognition and awards, we have been finalists for NASSCOM India FinTech Awards 2019, and recently being awarded top 3 FinTech startup in Vibrant Startup and Technology Summit Ahmedabad. It's a deep recognized and Government of UP recognized startup. I've been finalist for SDFC Bank Digital Innovation Summit Hyderabad, and incubation I've already told. Thank you.
Would you like to ask the questions? Yeah.
So the question which I would like to ask that what is the investor sentiment in the fintech segment at a time when business in all other sectors are adversely impacted? And the second question is there is going to be a shift in consumer buying behavior after this pandemic. So what is the impact on digital lending startups and way forward post COVID-19? What is the scope of fintech startups who are offering last mile banking and financial services to the underbanked, underserved and underbanked areas where banking has not been able to reach? And there are very, recently 1 or 2 unicorns are there who are into lending value chain. So why there is very few unicorns comes from the lending value chain? And the last question is digital only is going to be the new industry now in financial services industry post COVID-19? Thank you.
Super, thank you. Can we just stay on the question slide, and Amitesh, Sushma, Abhishant, whoever would like to take them?
I can take the first two. It's very relevant, and we have been hearing that a lot from our portfolios as well. Now, in terms of investor sentiment, I think we are, internally getting a bit aggressive on the fintech side, because I think we believe that is where, in terms of the digital platform and creating that value chain and outreach will be very important. I think Abhishant also mentioned that, if businesses of digital nature, where you can consume digitally and purchase digitally, something going to be a new norm. Now, whether it's going to be a new norm for a short term or a long term is something which we are learning, and we will see how the whole situation spans out. Right now, every day is a learning, every day is a new thing which we are hearing as to how the customer behavior is shifting. But I think one thing is very clear, that the fintech segment, providing the digital services and providing those digital platform, and especially on the lending side, when we see that MSME push, when we see that a lot of people trying to create something on their own. And I think that push is going to see, we're going to see a lot more on the digital lending side, where people can, have some tailor-made solutions to build whatever they think. Because, I talked about migrants, and there's a lot of push which we're going to see in terms of digital lending post-COVID.
Okay. Sushma, would you like to take on any of the questions, or Abhishant? Abhishant, you don't know if you'd like to.
Yeah, so quickly, a couple of responses is, as I was saying, digital is going to be a hot subject even post-COVID. And as Abhishant mentioned, the ones who are digitally engaged from end to end are the ones that will see a lot of interest. However, what I also see is there are going to be a lot of collaboration between traditional models and fintech models. There will definitely be a recognition of, maybe the non-digital players understanding the importance of being enabled. And so there will be interesting partnerships that could emerge from something like that. So that's something that one can keep their eyes and ears open for. And interesting partnerships can emerge from there. So that's my two win. So investor interest will always be there as long as demand picks up, and it's a scalable opportunity. There will always be money flowing in.
Sushma, sorry, can you just expand on the partnership response? When you said interesting partnerships, are there any examples of case studies you can use for illustration?
Yeah, sure. So there are certain traditional models, especially, going back to the topic in discussion, where there are last mile delivery traditional models, like say a MFI, MSME lender, HFCs, are doing things very traditionally with feet on street. And they don't have any digital interventions to overcome our current environment. Like, for example, in COVID, if people don't have a digital LOS system, a loan management system, maybe a collection system, then they are kind of jammed in the current environment, right? So they will look for partners who are digitally enabled to integrate into their existing systems to make them better equipped for the current scenario. Those are the kind of partnerships I'm talking about.
Thanks for clarifying. Abhishant, did you want to add to the responses?
Yeah, so I'll take from the first question. So what is the investor sentiment? Investor sentiment is a function of which stage. Achha, good to see you, Ganga. We could not connect in Lucknow, but good to see you here. So,
yeah, thank you. Yeah.
So first and foremost, what is the investor sentiment? It's a function of which stage you are and what kind of money you are intending to raise. So if you are looking at raising a seed kind of a money, which is in the range of 1 से 4-5 crore, नहीं मिलेगा अभी. it's a very, very difficult kind of a money at this stage, because the kind of angel investors that you need for that kind of a money is a difficult piece at this point of time. Anything which is more of a pre-series A, wherein you have a set of investors who are not Tarun Mansukhani or Anil Ramchandani, or essentially basically anyone who had the money and you took money from them, and it is not investor, and you have credible angel investors on your cap table. In such case, you will be in a position to possibly influence rightfully on a pre-series A or a series A kind of a scenario, if your business at this point of time suffices 4 conditions which I talked about earlier. Anything which is beyond series A and others, in any case, they involve themselves in a discussion for a longest time. We at our end, we invested into a lending startup just 2 weeks back. So it's essentially as simple as this, that if we believe in the use case and the use case satisfies those 4 conditions, we'll continue to invest. We are a seed stage investor. We are not a pre-series A or a series A investor. There's going to be a shift in consumer behavior. Yes, at this point of time, digital lending has completely gone bust. I was talking to a gentleman who is CEO of a credit bureau yesterday evening, and he said, "Yeah, Abhishant, May ke jo numbers hain, wo April." Because in April you had a flow which came from March numbers, which got flow through from the last month perspective. In May, actually till date, bureau scores जो market से लिया है, that is even lesser than April. So situation is pathetic, is bad at this point of time. So therefore, lending startups who essentially saw it early on the plate and started going on cash in March are the ones who will continue to have a scheme of things for them. Others will have a very, very difficult time. Those who are in affordable housing will have even more difficult time, largely for the reason that housing has gone in any case down, and affordable housing segment, which is less than 25 lakh from a category point of view, had always 2 set of people who were earners. One is somebody who is a low income household who was in a low income value chain but a permanent employee, and other was a temp employee who was working on a temp basis there. That temp employee part has vanished. As a result of that, that affordable housing from a category point of view will suffer a lot. So therefore, it will be very difficult from the point of view of lending startups for the time being. Scope for fintech startups offering last mile banking and financial services, you know it very well. Those who have entered into this business from the point of view of business correspondent as a value chain in terms of offering that ecosystem, उसमें किसी ने पैसा नहीं बनाया है पिछले 8 सालों में. जितने VC ने पैसा डाला, सबने अपना पैसा जलाया है in last 8 years. The last investment which happened in VC value chain was Oxygen, which was the last major investment which happened. After that, nobody has made, because सुविधा ठप हो गया, बंद हुआ.
Correct.
ऑक्सीजन की हालत, मतलब वो ऑक्सीजन पे ही है आज की डेट में. So as a result of that, a lot of players who were in the BC value chains and early stage investors into that value chain, as nobody made money, it's very difficult that anyone is going to put money into that value chain from the point of view of pure BC led ecosystem. As far as unicorns from a lending point of view is concerned, as I said already, if you consider DMI from that standpoint, they became unicorn 1.5 years back. You need to see that fintechs follow a journey which starts from payments. 1996 is when PayPal got created. 2006 was when M-Pesa got created, and then you get an M-Copa in 2011 or 12. You get a M-Shwari in 2013-14. Similarly, you get a lending club and others in 2007-8. So therefore, till the time you don't build digital footprints, lending domain doesn't take from there. As a result of that, lending startups always start late. So therefore, you will have to give them time to become unicorns. Is digital only going to become a new norm from an industry point of view? For a short term, yes. Medium term, quite likely. From a long term, which is beyond a year.
Thank you for the insights. Thank you so much.
Thanks.
Thank you, Abhishant. Super. If no one else would like to add, I'd like to ask our Lakshya team. I think Nishant is presenting for them. Can someone please make sure Nishant has the ability to turn on his video? Okay, super. Hi, Nishant.
Hi, everyone.
Welcome. Please take about 5 minutes to explain your story and then 10 minutes for Q&A.
Okay, great. Hi, everyone. I am Abhishant. I'm the co-founder of Lakshya. Lakshya is a company that has been created by InView to catalyze systematic change in financial inclusion. So we looked at how we could fundamentally increase the quality of the effort. And it started from a simple observation that savings in bank account of low and middle income segment were low, and we particularly talking about the Jan Dhan Yojana accounts. Further, most of the products taking off in the financial inclusion ecosystem were geared mostly towards loans and insurance. While all the products are important and need to cater to different needs of the customers, we feel that savings is the key to build the foundation of a good financial health for a household. And therefore, we examined how to deliver large-scale financial health centered in savings first approach and build from there. Just to draw an analogy similar to how midday meals and presence of toilets are key to access but don't improve the learnability, there needs to be a concerted effort to translate the financial inclusion efforts to financial health, improving the financial health of the household. And as Sushma and others were mentioning, today we are at a unique inflection point in history where digital inclusion has increased significantly and Bharat Stack has created large scale change from where we can start. So when we started working with diverse segments, and we realized that the complexity at the household level, the way they manage their financial requirements are very complex. And to keep our focus, we decided to work with only one segment, and that was auto driver in Bangalore. What Amitesh was mentioning as a sorry. Yeah, what Amitesh was mentioning as a experiment to see what are the fundamental issues are there which are blocking the financial inclusion efforts to get converted into better financial health of a household. So we have started working with the 2 lakh plus auto drivers in Bangalore, and from there on we will see which all segments we can take on. So some statistics, less than 5% fintechs today serve in the LMI segment, and currently the products are available are not tailored for the LMI segment to achieve financial health holistically. At least that's what our experience is. As an example, one of many struggle of our client is financial education, and one of our customers used to pay nearly 60% of the interest in informal loans to send his children to school. Put another way, with simple financial prudence, he could send another child to school. What do we mean by financial prudence is, say for an auto driver, can he increase it by taking one ride a day additionally? And that would be sufficient for him to achieve this purpose, achieve this goal. As all of this is financed from his balance sheet, a little bit of actionable financial planning through savings makes a world of difference for him. This is one of the many things we are innovating. In summary, there is a need for product and business model innovation towards holistic financial health.
Would you like
can I go to the
next slide, Nishant?
Yeah, please.
Yeah, thanks.
Okay, so what we did, we put this concept to test, and we gave a very simple product to our customer segment. And average saving, what we found was around 8,000 rupees, which is significantly higher than say a 1,500 or 2,500 rupees, which is available in a Jan Dhan bank account. And within a very short span of time, a corpus of around 16 lakh was built by our customer. And the key ideas which were reinforced was, you need to connect with the emotional purpose. You need to reduce the cognitive load for the customers, and you need to simplify the journey for that customer to achieve his financial health. Next slide. Yeah, so this was the first solution that we built. As I said, that we wanted to start with savings. So we created a simple mobile app where our customer can save as low as ₹5 as many times in a day. And it is saved in a safe and secure mutual funds. And we provided very specific features which are required by our customers. So the saving frequency can match his income frequency, for example. There was no minimum amount which he needs to save in a given day. And we by working alongside auto drivers very closely, we were able to develop specific nudges which were used to motivate him. For example, for sending his kid to school, we said that, okay, you need to take just one additional ride, and whatever money you earn from there, you just stay with us, and we will ensure that you are sending your kid to school without loan. Next slide. Yeah. So
just call out that you just have about 10 minutes left, so this will cut into your Q&A time.
Yeah, sure.
Yeah.
Sure, Parvathy, I will just show. Okay. So this was savings was just the starting point, but we want to build a full product stack, which can help customers to manage his cash flow, build his assets, address external shocks, and other benefits like government schemes. Next slide. Okay, so when we were launching our app, then at that point of time we were hit by COVID-19, and as a response to that, we accelerated our other efforts. So we as a way to support our drivers with additional income, around 600 auto drivers to deliver to jobs for delivery executives. We sponsored around 100 auto drivers for COVID-19 insurance, and we supported around 10,000 auto drivers in association with the auto union, one of the largest auto union in Bangalore, to get the this is still in process, but to get the government issued benefits, right? And what this has resulted in, we are able to build a coalition of partners who are willing to come with us and support us in this journey of making auto drivers more financially healthy. So for example, we are in the process of signing an MOU with an auto union which has a potential to reach to 50,000 auto drivers, right? Next. Yeah, that's it. Next slide. So this is my team. Me, Nishant, Ashwin, and Janini. Janini leads the community, and Ashwin manages more on the product side and strategy. Next. Yeah. So some of our key questions were, see, most of the fintechs that we look at, savings is still not one of the primary products which are offered by the fintechs. And I understand the reason, the margins are not there. So my key question is how, especially to Sushma, if you were to put a fund together to tackle household financial health, which is centered around savings in the Indian ecosystem, how you can do it differently so that this can attract potential investors and potential VCs, right? The second is we understand that we are tackling a very complex issue, and it is important to bring like-minded partners and bring cohesion and build cohesion so that we can, we are not solving all the different problems even for a single segment like auto drivers. So who could be the like-minded partners, both at the product level or the distribution level, who can help us to build, who can help us to solve some of the critical issues to achieve our goal?
Sure. It's very interesting what you're trying to build, and at the root of it, I do see financial literacy as being the fundamental thing that you're trying to incorporate here, right? And I think financial literacy is again lacking at multiple levels, not just at the financial inclusion level. We talk of even LIG, MIG levels. Financial literacy is very poor. And so I think what you're doing is fantastic. And some of the partners that came very intuitively to me is, have you even spoken to small finance banks, right? So they all come with a very strong legacy of having worked with grassroots level businesses, and they have all migrated from being MFIs into small finance banks, right? And very recently. So they will understand the segment also better. And because of the nature that they have, or the form factor that they have of being a small finance bank, they can provide better savings products. They have the right outreach also. And so I think they would probably, I can see them being a good partner for you in your journey in the short midterm.
Okay, thanks. So I mean, one of the key question is also around how is to bring the incentive around the regular savings, because that remains one of the key challenge for us to sustain that motivation. Can we transfer some of those benefits for credit or for other products?
Doesn't it come automatically? Because once a savings is built, and you can kind of tell them that their credit history or the credit track record is being built basis the savings that they are creating, and credit would flow basis that. I think that is something that will work well.
Okay. Guys, maybe this question can be answered to. Yeah, please.
छोटी सी चीज सबसे पहले तो when you are saying that savings के point of view से fintechs काम नहीं कर रही हैं, तो तुम you will have to go up around, you need to take a night bus or a train and head towards Chennai. Chennai, go to IIT Madras Research Park, and the door next to Samunati is a door wherein a startup called Kaleidofin is. So Kaleidofin, Puneet और सुचारिता को बड़ा बुरा लगेगा ये सुन के that you are saying that savings पे कोई काम नहीं कर रहा है पहले से. So they started this entity.
Yeah, just a clarity there that they are of course one of the rising stars in the space, but apart from Kaleidofin, I don't hear many more options which are working in the fintech space and working for the savings.
Yeah, there are. So I'll share with you a list of those. So there are people that, of course, there is a challenge from the point of view of the fact that savings as an instrument, as it does not provide for a remunerative value chain as much as lending does. So therefore, it does not essentially make itself as much as qualified as lending does. And therefore, that's the possible reason why Kaleidofin is also revisiting the model in many which ways, from being purely rural and seva, the value chain with which they started, to now looking at small businesses and others. So that's where essentially possibly over the period of time people reach from that value chain point of view. I just had another point to make, not more than that, which is you need to be a bit clear that you don't want to be just with one business value chain. If you have heard of an entity called Fleet, if you have not heard of that, please look at that. और थोड़ा सा अपने आजू बाजू उजाला करो. अभी जो BBC जब इंटरव्यू लेता था, जिस समय पे चेहरा छुपाना होता था लोगों का, उस तरीके का तुम्हारा आ रहा है दिखते हुए. So as far as that specific piece is concerned, you might have heard of this entity called Bonfleet. It was only working on Uber, Ola, taxi value chain. As the ecosystem got hit by a black swan event, and of course one cannot comment upon a black swan event for sure, this entity, which was funded by Omidyar and few others, shut shop last month. So therefore, somewhere you need to find that you are not putting all your eggs in a single basket, and therefore you have a value chain which is a bit beyond. If you are talking about public transportation, which includes private public transportation of an auto, maybe you may want to expand to one or two more categories of similar nature and not just restrict yourself to auto. That's it.
Okay.
Super. Thank you so much, Abhishant and Sushma. Okay, I could not be more excited for this. Fintech has been a recurring theme that we've been talking about all through the session, and very close to my heart as well. So Abhishant, I cannot wait to hear the insights that you have to share here. Over to you, and really looking forward to hearing from you.
Thanks, Parvathy. So first and foremost, who we are. We are the largest early stage fintech ecosystem in this country. So we are not part of the ecosystem, we are ecosystem. So we essentially undertake a road journey every year. That's the reason why we know most of the startups in this ecosystem. We cover 11,000 kilometers of the country every single year and meet up with around 1,000 plus startups. Out of that, we run an incubator with IIM Bangalore. That's the only fintech focused early stage incubator in the country. Then we run an accelerator, which is funded by Government of India, Ministry of Electronics and Information Technology. And then we fund some of these startups which come out of these incubators and accelerator. We don't do open market funding. So that's essentially about us from idea to capital. Specifically coming to beyond COVID, creating an agile fintech, we'll have to look at it, and fintech is not one specific piece. We'll have to look at it in a totality, which is that fintech represents payments. So beyond COVID, creating an agile fintech from a payments point of view will essentially mean that anything which is promoting more of social distancing, which essentially means VPA-led, QR-led, and now more so when you will hear about Beam for lending, you will realize all of that is essentially going to take a payments value chain from the social value chain standpoint, which means that anyone who till date just had a POS terminal with him as a shop or otherwise establishment, they will slowly and steadily go towards having a social distancing value chain, which is on the QR side, which essentially will mean from a payments value chain point of view, you will see more activity on the acceptance side of a value chain and not as much on the consumer side of payments, because consumer side of payments, you already have large ecosystem players. The second activity which you'll see from a fintech standpoint will be on the B2B side of the value chain, wherein you will see more and more of entities on the supply chain, digitization value chain, and so on and so forth. That will mean creation of a digital footprint for the purpose of an organizational value chain. So you will slowly and steadily start looking at startups which are only working on education from a payments B2B point of view. You'll slowly and steadily observe startups which will specifically work on maybe a supply chain on dairy. There are enough and more, but integrating that from a payments standpoint and so on and so forth. So you'll start looking at more and more startups in each supply chain, and they will have an acceptance. Yesterday, I was talking to someone who heads DAV, and we were essentially talking to them from the point of view of a school fee management solution, which one of our cohort startup has built. They have a value chain of around 800 schools across India, and the way they were essentially good with the idea of that value chain being integrated is something which I had not heard till this point. And the excitement on that piece is high. So you'll see more and more startups from the ecosystem point of view coming in that space. From the point of view of lending, what lending will have two difficulties in the times to come. First and foremost, यार जिसको पैसा दिया है उसको सही दिया है कि नहीं दिया है? That's the first question which will have which startups will have, because you don't know what happened to their ability to pay the foundation of credit in this scheme of things. So you have that, and therefore you will not have an answer for that as a question. So that will be the first question which lending startups will have, कि portfolio का क्या करना है. The second question which they will have is essentially from the point of view कि अब acquire किसको करना है, because bureau तो उतना ही बताएगा whatever is available from a bureau point of view in the last record, and that's it. Bureau is not going to be as much enriching from an information point of view, and so on and so forth. So therefore, you will observe more and more fintechs again getting into the experimentation value chain, which at some point of time they will start calling it as an AI ML play. And of course, it is not AI ML play. It's essentially about experimenting with the capital, identifying who is the most worthy set of consumers who are still paying money back. And that's where essentially it is going to be. From a segmentation point of view, you will find it, if they have done that, God bless them, which is essentially if the lending fintechs have done the segmentation of travel, hospitality, partly transportation, anything which is small and medium businesses other than kirana, medical, doodh and others, if they have done that segmentation from a merchant category standpoint, then of course it will make a lot of sense, because then they will decide to zeroize the limits of anyone who is in travel, transportation, hospitality, events. So those who were doing events, conferences and others, they are all in a pathetic shape at this point of time. I was having a conversation with ET just an hour back or so, and Economic Times guy who looks after that conferencing piece, he said, boss, the value chains have collapsed by almost 1 by 20th. मतलब पहले अगर कोई 1 रुपया देता था तो अभी वो उसके 5 पैसे दे रहा है from an events point of view. That's the level at which it has collapsed. So anything which has got to do with these segments, in all of these segments from a category point of view, we will see lenders withdrawing themselves, and that's essentially obviously the right thing also for them to do over a short or to medium term. Coming to wealth from an ecosystem point of view, wealth as a value chain has found certain movement upwards. In fact, 2 of our wealth startups are, as soon as I'll complete this conversation, I'll need to get into another, wherein 2 of our wealth startups are pitching to a fund from the point of view of wealth as a value chain. So wealth from a value chain point of view has seen an upward movement, largely for the reason that people had a lot of time first. Second, they got a bit of disposable income. They realized that, boss, अगर घर का खाना खाना है, दूध पीना है, छाछ पीना है, और आपकी कोबरा बियर की सप्लाई नहीं होने वाली है, तो then that essentially means that आपका महीने का खर्चा will not be more than 15 to 20,000 rupees month at all, minus your rental and school fee and other things and so on and so forth. So therefore, there is a lot of disposable income which got created, and as formal sector except for startups has not seen much of unemployment as such, so that income is also leading to a lot of it essentially going into the wealth based startup value chain, which have a full integration from an end-to-end point of view. Insurance is seeing great traction. There are 3 segments within insurance, which is health, general and life. Mortality in all of them has gone down, which means the loss ratios of general insurance companies have improved significantly. At the same point of time, the segment which has seen most traction is essentially the segment of general insurance and health insurance. Life is more or less stable. General and health has seen most piece, and therein also a health related piece has seen most acceptance. They are growing like anything. The kind of growth we are seeing in health as a value chain is unprecedented. In that segment, as I said earlier, anyone who can deploy solutions from the point of view of an API can be consumed by other party and fully deployed digitally, can be consumed by a customer and bought in digitally, which means the policy goes into the inbox or in the message box, and can then be opted by the customer when there's a need, which is obviously this hour when there is a need. So never before anyone else in the world thought about health as much as they are thinking as of now. So therefore, health from the point of view of that has seen most traction, and health fintechs therefore will see the greatest traction. From the point of view of financial inclusion, specifically, anyone who was into the disbursement value chain knows that the remittance flow, migrant remittance flow, remittance corridors have collapsed. Remittance flow from the point of view of a migrant in Bombay to a migrant in Gorakhpur is at this point of time not there. What is going essentially is a money which is flowing from central government in form of DBTs and others by Aadhaar into the bank account of individuals, but that's paltry in comparison to what was the remittance flow. The total money which has flown from an Aadhaar standpoint is 4,500 crore additional as compared to a regular flow from the point of view of DBT. So which means anyone who was specifically into the scheme of things from the point of view of value chain, from the point of view of financial inclusion, will have a tough time. Those who are adding value in terms of providing a digital layer to MFI entities and so on and so forth, they have found an amazing acceptance. We are conducting a capacity building workshop along with NPCI, NABARD and few others for approximately 500 plus MFIs across India in next few days. And that specific workshop that we are conducting is focused on that piece only, because there are loads and loads of MFIs who essentially intend to understand data, intend to understand digitization of the value chain far greater. And that's where essentially there is a lot of movement which is going to happen. And that's where acceptance of that is also there. I had a MFI from Lucknow called up last week which said दादा कुछ video KYC side पर क्या हो रहा है बताइए, and who is the best player and so and so forth and all of that. So therefore all of this as a value chain, you will see coming into picture. You will see more or so of them in starting from June end or July or so. So that's kind of a brief view of things from my end. Sorry if I exceeded the time. Thank you.
No, not at all, Abhishant. It was super helpful, super actionable, and I think extremely detailed. So I don't really have that much more to add to what you and Sushma and Amitesh have already shared. I do want to just, wrap up our session and thank you all for participating and joining. I'll be honest, I have not done sort of a Shark Tank format event without being all in the same room, right? So how would this work over Zoom? How would the energy work? And most importantly, would the audience get something that is tangible and actionable? Would the participants feel like they're walking away with value? Would the panelists feel like they've been able to share everything that they can? I was very nervous about it, and I think.
We'll join.
And I think the insights that Sushma you started off with, right, with the pyramid framework and sort of a mental state of how we think about financial inclusion today, to all of the very diverse organizations that have presented. Your solutions are all, quote unquote, under the same umbrella, but so diverse from the perspectives you're coming in and trying to solve this problem from, right? And then to the policy level information that we heard. And Abhishant, you're extremely specific, extremely, tangible, down to an organization level, insights that you were able to share in terms of connect. I feel like I walked away with a lot from this session. So I really want to thank you guys for that. What do we do next, right? One is, there's still about, I think there were about 120 participants at some point. So there's a lot of people that are clearly interested in this topic. This is not niche. This is really something that folks are keen to understand, how this works and where they can apply themselves and what are organizations to connect with. So this will be on the Quince YouTube channel. I'll make sure that, the link is shared. If somebody can just make sure to share that link on chat, that'd be great. So all participants can have it. There's been a lot of Q&A that has come in, and also some questions asking to be connected to individual organizations that presented, as well as the panelists. So we'll reach out to you and find out, if you're okay with some of these connects, and if so, make sure to share your information. Again, thank you very much for the thinking, the ideas, the work that went into this. I'm really excited for the conversation that we were able to have and the quality of conversation we were able to have over Zoom as I sit in my son's bedroom right here. So thank you very much. Sushma, Abhishant, anything that you would like to share as sort of parting remarks or words of wisdom for the audience?
I have a long parting remark, so I'll refrain from that and hand it over to Sushma. I'll put that if we still have a time.
Sure.
No, I concluded in my section to say that, I think it's time for all of us to step in and make this work. Yes, people are negative. Yes, people are anxious. They don't know how things will unfold. But I think if we all play our parts, we will all come out stronger together.
So I have there's something which I wrote around 2-3 days back. So that's what I'll share possibly, and that's the spirit of startups. It's essentially a short poem. मेरी कहानी, वो उम्मीदों भरी उड़ान छू लेने निकले जो आसमान, वो उम्मीदों भरी उड़ान छू लेने निकले जो आसमान, उसमें काले बादलों का निशान अभी बाकी है, मेरे संघर्षों की ये दास्तान अभी बाकी है। वो सवाल पूछती आंखें, वो जवाब तलाशती रातें, वो कुछ अनकही अनसुनी सी तेरी मेरी बातें, वो भोर की पहली किरण की आयातें, वो बेनतहा लंबी स्याह रातें, उन कदमों के कुछ और निशान अभी बाकी हैं, ये उम्मीदों भरी उड़ान अभी बाकी है। वो टूटता बनता विश्वास, हर आहट से निकलता वो काश, वो सफलता की पहली सीढ़ी के बयान अभी बाकी हैं। खुल गए हैं ये पंख मेरे, सारा आसमान अभी बाकी है। मैं से हम से ये संसार, मैं कहीं दूर छूटता पार। ओ मेरे हमसाए चल कुछ दूर और मेरे साथ चल, कि ये तेरे मेरे कदमों के बयान अभी बाकी हैं। वो जुनून जो सोने ना दे, वो खोज जो खत्म ना हो कभी, अनंत अनंत देखो वो आया नहीं कभी। चलो देखें अब कितने और आसमान बाकी हैं, ये उम्मीदों भरी मेरी दास्तान अभी बाकी है। तेरा मेरा जुनून, पल दो पल का सुकून, 7 समंदर पार हमारे बयान अभी बाकी हैं, ये उम्मीदों भरी उड़ान बाकी है। स्टार्टअप्स को डेडिकेटेड। थैंक यू।
Beautiful, beautiful. Could not end any better. Thank you so much, everyone. And we will be following up with information. Thank you also for all our participants and all our audience that stayed on. And please, on the Quint channel, this video will be uploaded on YouTube. So do check that out as well if you missed any sections. Thank you so much again, and all the very best to everyone that joined.